think I have the toughest job today. Who would like to take the first question? I think since we've all been bashing up the stock markets, I think it's only fair that we give someone a chance to defend it. And I'll start with Nilesh bhai. I think one thing I would like to tell is that one of the most renowned fund managers, not only anywhere in India, but across Asia and the globe, and thoroughly grateful, Nilesh bhai, for joining this panel. You heard a lot of this side. What would you have to say? Is it as bad as everyone is making it out to be?
I mean, let's look at casino. What is casino? Casino is a place where the customers either gain money or lose money, and the owner of the casino proportionately will make money or lose money. It's a zero-sum game where one party loses and other party gains. Is stock market equivalent to casino? What's the opinion of the audience? How many people believe that stock market is like a casino? No. Let's not debate about short-term, long-term, medium-term. In casino, I have not asked a question, is it day-to-day or long-term or medium-term? So there's not even one person in the audience who believes that stock market, at least here the audience believes that stock markets are not equivalent to casino. Not even one guy believes that. I really appreciate all of you for being honest and experienced. If Indian stock market was a casino, then it could not have been worth 70 lakh crore today. If Indian stock markets were casino, then one family in Kutch who forgot that they had invested in a company called Western India Oil Products could not have been worth hundreds of crores today because that company turned out to be Wipro. If Indian stock markets were casino, in the Antim Yatra of Dhirubhai Ambani, you would not have found so many people who were crying because their 1,000 or 10,000 or 1 lakh multiplied multiple times. So please remove this doubt from your mind that stock markets are casino. They are not. Number 2. Now let's go to the second question. Is stock markets rigged? How many of you believe that stock markets are rigged? So again, majority of people believe that stock markets are not rigged. It's possible that you don't know what you don't know. Now, if I ask the questions who believe that stock markets are rigged, have you invested in stock market? Or have you traded in stock market? You have invested and traded. And the rigging part is on investment or on trading side? It's in both. So can you give me an example of a company which after 20 years of rigging is still surviving? No, just name the company. An $80 billion company can't be created by rigging. That he is unable to see if Reliance was not in existence, even today, we will be importing petroleum rather than refining it. So there will be this kind of jokers who will always try to tell investors that, stock markets are rigged, stock markets are casino, please don't invest. If we see the history of stock market in India, in 30 years since 1980 when Sensex was created, how many times it has multiplied? It's about 200 times. If you had invested in fixed deposit or a public provident fund or an insurance policy, how much return you would have got? There are thousands and thousands of families which invested in Unit 64 and then they suffered against the inflation. There are so many retirees even today who believe that their provident fund will help them lead a retired life. The provident fund is woefully inadequate against inflation. The wealth has been created in stock market. Is our stock market perfect? The answer is obviously no. There are flows, there are occasional rigging, but then stock market is a ground where your fear and greed gets balanced. We have seen empty number of times that you had a choice of investing in Infosys or a Wipro or a TCS, and occasionally maybe Satyam. But if you prefer to invest in Himachal or a DSQ or a Silverline or a Penta Media, it's your problem. It's not the problem of the market. You were greedy, stupid, dumb, idiot to invest in those companies. You were not smart enough to appreciate Narayan Murthy and Azim Premji versus someone else. If you backed wrong horse, don't expect to win. Don't expect that the government will come and support you or regulator will come and support you. Stock market is meant for risk takers, and because you are taking risk, you are compensated. So, if I have to conclude, by no empirical evidence one can say that stock markets are equal to casino, because the gains made in stock market could be disproportionately higher for the investors vis-a-vis in casino. Second, is it rigged? No system is perfect, but we have to make it perfect. And whatever we have created, it's reasonably good. Even with this imperfect of the 70s and 80s and 90s, our stock markets have gone up 200 times in 30 years, or more than 20 times in 20 years, or more than 5 times in 10 years. No bank deposits, no provident fund, no other fixed income instrument can do that. And hence, look at stock market from an investment point of view. Of course, it has little bit of rigging involved, but as regulators come up to the speed, hopefully things will become brighter going forwards rather than darker going forwards.
Thanks, Nilesh. Ajit? Sure.
I think nobody else could have put it much better.
Yeah.
That's why I thought we should have given more time to
Yeah.
Nilesh, because this is, he not only put it so well, but also took your poll. I just want to add one or two things, just by way of that the system through which we participate, as I said, growth requires investments, investment requires capital in the classical sense of the word, and that can come from savers, and that can come from the banking system, but we also need one portion of the capital, which is what is called risk capital. We didn't not explain or define that, and we need a system where this can come through. So the stock market is essentially that system, but that system of course can be imperfect, and there is nothing that prevents us from going towards better system. We can obviously never hope for a perfect system, and the ground rules for going in that direction is more transparency, more information, more disclosure. So I think that is the way. And just one more comment which is related to what Professor Vaidyanathan said earlier. He said that anchors or media and all, they are trying to constantly influence people. But we have accepted a system to live in a society. We are not Thailand, we are not a monarchy. We are not like Singapore, which is, I don't know what you would call it. We are a system where we accept that we are constantly going to be influenced. And every few years, every 5 years, we are going to be given a chance to express how much we have been influenced. That system is what we call democracy. So if this whole pervasive system of influencing people, that time they call them voters, is a system we have accepted. And therefore, when you say that as investors or as participants in financial markets, we choose to be influenced, for every influencer, there is an influencee. So, everybody has a responsibility to be cautious about it. So, therefore, I am saying there is more transparency, more disclosure. This is in line with what he said. That's the system we have adopted.
If I could, before coming to Mr. Anantharaman, if I could come to Professor Vaidyanathan, if you could just talk about a few shortfalls, which he is also raised in the book, and Mr. Anantharaman touched upon. One is he said the seeming compliance, and maybe the disclosure norms. A lot of corporates are complying in letter but not in spirit. You are a professor of finance, and you've seen so many of these corporates, their disclosure norms and so on and so forth. Do you feel that as compared to the Western world or the European countries, the disclosure norms in India leave far to be desired?
No, I would not say that. We have adequate amount of in terms of text or whatever you call regulation, and see some corporates, as Anantharaman himself was telling about apparent type of compliance and actual compliance. Some corporates, significant number of corporates would like to actually comply, and they do that actually. And as Nilesh rightly pointed out, over a longer period of time, these are the corporates which would be able to really, what one can call flourish. And there are some situations in which I would like to say, somebody mentioned about rigged thing. It also happened. It's quite possible, because what I call always is which side of the curve you are. There are certain type of entrepreneurs, there are certain type of corporates which actually start off as what you may loosely call quote unquote, outside the parameters of justifiable behavior. But over a period of time, what happened? Either they become too big to fail. That is one possibility. Or they cross what I call it as a edge point. After that, it becomes so this is not something very unique to our. This is also reflected in other institutions. Actually, some people will know about read history about John F. Kennedy's father and what all he did and everything. So similarly, for instance, in my adjacent state, Tamil Nadu, I know some interesting people who run educational institution, which is extremely doing well, which is very high quality and everything. But the persons who are actually running it were earlier part of their lifespan, if you look at it, are complete crooks actually. You would not like to go anywhere near them with a barge pole. But now, the institution they run, they want it to be high class, world class, which is, really they are striving for it. So it's also quite possible, sometime, in the spectrum, it's in the sort of this side of the curve versus. But sometimes institutions which continue to be, depending only on, paper thing and rigging and other thing, I think in the long run, those institutions really cannot survive, because, beyond a point, people are not going to facilitate that or growth or that. So I would say, as far as regulatory paper basis or thing is definitely there. See, I think one important point we all should recognize, ultimately it is the operating people who have to really do the compliance. I'm on the board of a couple of companies and everything. I always used to wonder actually, Finally, I think the people who are actually operating the system, how much they are complying with it or how much they are genuine in terms of looking at the spirit of the thing, is extremely critical. To the extent external regulation, external supervision, policing, I mean external, I don't even mean outside the company, even within the company, there could be a lot of these checks and balances. But ultimately the operating executive should know where does he stand? Because everyone wants to present a different picture than what they are. That's according to be a normal thing. Everyone wants to, what you may loosely call window dressing or something. See, if you make 100 crore sales and if you show it 105 crore, that happens always. Two things which are very uncertain in India, I always say, is what is the last date of the accounting year for a company. Because every division wants it to be another 3-4 days extended so that they can show it. The second is what is sold or what is sales. The sales revenue is, these are the two issues which are under full dispute. Right. Sales revenue, I have seen, products being kept, and then I asked the, chief finance officer, why have we kept all this thing here? You should have sold it. No, sir, our customers are having space problems, so we are, we are being very, very kind only, right? What is called, there is one major public sector company which used to call it as actually goods held in trust, GHIT. It is sold but not sold. This is all very, many of you will know who participate in the market and know. There are a lot of companies in this, sales but not sold, sold but not delivered, delivered but not billed, billed but not, too many things. Some number will come. So again, this goods held in trust, they used to earlier call it stock held in trust, but that abbreviation was very, unfortunately not good. So they call it goods held in trust, and it didn't sustain actually. Later on, it's a government company, so the government asked them to redo the entire annual report for a period of 10-12 years. What I mean to say is, it's a stretching, how much you stretch yourself in terms of deviation from what you may loosely call a norm or something. See, I came here, the organizer asked, Bangalore sir, did you spend for a taxi? Okay, suppose, I'm just giving as an illustration, I spent, say, 1800 rupees. I tell the organizer if they are not insisting on any, whatever you call it, say 2000 rupees. Right. Suppose I tell them that it is 5 lakhs, the local travel at Bangalore. Then they will look at me, there is some CWG going on here, right? Because he could have bought a car and then, instead of renting it out, right? So that's what they were doing, I am told, right? Many items actually they did the other way. They rented out much more cost than the cost of the item. So what I want to say is, if 100 crore company shows it at 105 crore or 104 crore, it's not going to be, it can sustain. But unfortunately, if it is again and again has to show it, that is without actual results coming in, year after year, obviously, it's going to face a severe crisis. Because next year it has to show 110, next year it has to show 150. And as he told, after a couple of years, people will come to know. So according to me, there is always what is called a stretchable limit to which I was an MBA chairman in my institute. I always fascinatingly remember this thing, In those days we used to have this summer project, people used to, even now it is there. But we used to fund a lot of their activities. So people used to, go all over the country and, students will come back and, students are students after all, they will fill up some, what you call, reimbursement form. All fellows will give Ram Singh, that every taxi driver in the country is Ram Singh. So he will, even then, I used to be, in charge of, looking at all those. Beyond a point, you can't look at all those. But you see, again, one student, very unfortunate he was, he put Bandra to Nariman Point. Auto. Huge amount. So my clerk, who has come to Bombay only once in his life, but he was not able to catch an auto, he came to me ranting, sir, this, how has he put a huge amount as all? In those days, some 150 rupees. That is not possible, sir. This is a very highly investigative thing. So, obviously, so I called you being stupid, when you want to deviate from the norm, you should know what you call acceptable deviation, what you may loosely call, right? So this is what, it's not some top secret I am revealing or anything. Every company, every division, within company there are huge problem actually. Some of the chairmen have told me that we don't know what the divisions are doing, because every division is trying to put up a bit good picture. Divisions are having problem because every department is trying to put a good picture. But is it within the, what one can, I do not know what word to use, because there is nothing called a desirable deviation, to be very precise. But it does happen. But so that's, I think the most criticality is not in terms of having these regulations are must and other thing, but what are the operating people finally, they are the ones who have to really exercise judgment and run the show. And if they decide, if they collude or if they decide, I think it will be extremely difficult. Maybe after an event take place, we would be able to identify. The only, everybody knows, everybody has talked about it. Only problem is we are not very swift and speedy in terms of bringing people to task.
There I'll get Mr. Anantharaman.
That's the thing.
I think a lot of people would in India think that regulation is not tough enough. We have the laws, but the implementation is not robust enough.
I will just say the stock markets have withstood the what you call onslaught of 2008-9 meltdown, and it speaks of a very high, robust and what you call healthy standards for the stock market. Number one, maybe there are deficiencies we all concede, and as we grow, we'll overcome those deficiencies and become stronger still. And the stock exchanges, the NSE has got such a phenomenal market share in India, and outside also the indexes are very much this thing listed and then doing very well. What is important is why the rigging take place. There are some rigging. It's not as if the market is free for rigging. Nobody says. Basically, some penny stocks you find or some low mid-cap stocks are getting rigged because there is no liquidity in those stocks. Few shares are being sold on occasional basis. But suddenly people want to make use of that situation because it is always easy to manipulate illiquid stock rather than liquid stock where you require a lot of financial muscle and what you call a lot of pressure in the market, like a lot of people react with you. But here illiquid stock, people can join together and create an artificial volume with what you call few trades or few cycles of trades acting among those what they call circular trades or synchronous trades as the case may be. So it is all basically done, some people, some illiquid stocks which doesn't have liquidity in the market, at the same time they want to generate value out of that artificiality. At the end they will dump it on unsuspecting investors or market participants. That's what is happening. So like that we have cited the case of DSQ and then other illiquid stocks in those days where artificial volumes were created by this kind of trades. Doesn't mean that it happens every day. That's why I want to make it very clear. The second thing is, if you look at the most of the fraud that have taken place, it has taken place outside the stock market. Ponzi scheme, or today you look at some other schemes where people are assured of returns. Those schemes are not run by markets or introduced by market, and they are mostly happening outside the market and the duration of the market. And people are lured by this assured returns of 24%, 45%. They virtually fall a prey to these manipulations and schemes. We have come and then to settlement. We are moving ahead with so many what you call changes which are meant to progress and make the settlement efficient in time. That is what is happening. We don't require regulations. Even there are deficiencies. I am the last person to advocate more regulations for the simple reason, the more the regulation, the more the breaches, and the more the what you call need for some kind of regulatory supervision and all that. Regulations are adequate. Regulations are enough to take care of any situation, even including a scam-like situation with all that enormous proportions, and anybody, regulator can easily manage it. And above all, I want to say, SEBI as a regulator has got a most sophisticated technological system. It is called Integrated Market Surveillance System, which gets its feed every day from all the exchanges, from all the depositories and the clearing corporations. And those feeds are analyzed overnight. The next day morning, the alerts are thrown in respect of certain suspicious movements in relation to certain stocks which are being traded. Some of the alerts are being made use of, and some of the results which might have come recently by way of investigation are based upon these market alerts and purely proceeds on the basis of technology and the alerts thrown. So we are also moving in tandem with the developments in the developed markets, and we are doing that well also. As far as I am concerned, I am quite sanguine about the stock market from going to greater strength. But what is important is, if at all there is a bad name to the stock market, the investors, the people who go for such kind of low value stocks, who want to make quick money out of greed or whatever they say, or it's a kind of this thing what you call herd instinct, they bring a bad name. The market is only a service provider. Ultimately, it doesn't, I told you, it doesn't have a character of its own. It operates the way you want to operate, and then you put the blame on the market. I think we as an investor, we as a trader, we as a participant need to discipline ourselves and go after stocks which are worth cultivating, which are worth investing in, and give the necessary sinews of strength to the stock market instead of blaming the stock market for all the years. According to me, the market and the regulator have done reasonably well. Of course, they need to tread a larger, a long way to really make it perfect, but we cannot have perfection because, as some Supreme Court judge in one of the IT cases I remember, perfection in human affairs is a myth, and absolute perfection is an absolute myth. Thank you.
I do want to persist with that point because MR has mentioned a lot about one case in particular. I think it raises a question of not whether we have enough regulations, but how they are implemented. For example, I think one case which he has dealt with in detail is the UBS case, and since you've reviewed the book, you know, where finally the stock market crash in May 2004. SEBI found UBS guilty, but finally UBS got away.
No, that's why we are. This is a process of concern. I am not defending anything what SEBI did, because I myself passed the UBS order. I don't want to be talking about it, number one. Number two, it happened much after I left SEBI also. If the scheme, the process of the scheme and the spirit of the scheme has been followed in the consent, it is okay. But I am not the person to comment about whether it was followed or not. But the consent is provided for under the SEBI Act. And there is a what you call elaborate rule for consent mechanism. Recently, another high-profile case was settled in consent. Therefore, it is a process which is market-approved process. Such consents are very common in USA, what they call plea bargaining and all that. And vexatious cases with long-drawn battles are settled across. Because what is important is, see, the evidence you may say you may have pakka, but if they go to court, ultimately there will be some loopholes, some gap somewhere. And courts may be the first one to strike down the very order you have passed, and then there is hardly any scope of your really rectifying the matter. So that is being so, what happens is the regulator sees the balance of convenience as to what is to be done, whether to go for a settlement or not, of course, depending on the merits of each case. Accordingly, they decide whether the case fit for, and there is it's not a regulator who decides, there is a high power committee, it's an independent committee which decides the scope of consent and the eligibility for consent. Accordingly, it is done. Maybe there are certain, as Mr. Venkatesh has observed, that a particular case, it has been settled for a lesser amount. Maybe it's correct. We should have used the occasion to get more names, more what you call details from UBS. It may be possible. But whether we were in such a position, well, I cannot comment on that. And whether SEBI alone could have demanded it or demanded or required some more concerted effort from other agencies to really look for it, it's very difficult to say. And ultimately, there is a question of privileged information, there is a kind of secrecy based upon our treaty negotiation and all that. Ultimately, nothing may come out on the deck says also. In such circumstances, perhaps the balance of convenience remained with a settlement, and that is what was done by SEBI.
I think Dr. Ranade,
Can I just throw some light? I think the importance of Mr. Venkatesh's book is the following, that, see, one of the consensus I hope is emerging is that stock markets are a mechanism, like I said, to mobilize risk capital, which is essential for economic growth and development. But this system has to be has to have a robust system of regulation and supervision and so on. But I just want to give an example, and this is why Mr. Venkatesh's book is important, that somebody and many more people like you have to keep on questioning, some of the orders, some of the outcomes. I'll give you two examples. We passed a landmark legislation called the National Rural Employment Guarantee Act 5 years ago, which is now sort of recognized all over the world as the largest employment program, relief program or whatever in the world. Now the word is National Rural Employment Guarantee Act. The Act says that it is only for rural areas, not urban areas, that if you are in a rural area and it's a drought season or for some reason there's no job, you're not getting a job, you can demand, and the government has to start develop a relief work or some project there, like a road building or water tank rehabilitation or irrigation, something like that, forestry. And in case the government is not able to fulfill that, start the project in 15 days, then it is this act gives you a constitutional, it's a legal right to get that money on a daily wage from the government, right? So you get, I think the wages are 100 rupees per day. Past 5 years ago, in the last 5 years, the government's own statistics claim, and there's no reason to doubt it, something like 300-400 million man days have been created, of employment has been created. Some people think that during the 2009 drought, one of the reasons why there was much less rural distress or much less distress migration was perhaps because jobs were created. Now industrialists are complaining that because of rural wages having gone up, we are not getting labor for construction in the cities and so on. There's a different story. But I'm coming to the Venkatesh point, that 5 years, 500 perhaps million man days. So somebody asked this question. This is a constitutional provision. Can you tell us how many people actually took recourse to the guarantee? How many rural people came and had to demand their rights to be enforced? That is, if it's really a constitutional guarantee, we should test it. So that's the regulation part, that how many people actually had to take recourse to this legal right. Answer, hardly 100 or 700 people. Cases, all India, 500 million man days, jobs created. Is it that the government has become so super perfect that nobody even had to rush to the court? Something is wrong there. So that's why we need people like Venkatesh to smell a rat. Second example, right to information. Same year, 2005, another landmark legislation was passed, right to information. What does it say? What is the genius of this? It is putting individual responsibility. So it has given every citizen of India a right which is on par with Member of Parliament. A Member of Parliament, an MP can summon any file from any ministry. Same right has been given to a citizen of India except for some defense matters and national security. So what does it say? The genius is that it puts individual responsibility. If the guy does not give you information in 15 days, that person will be penalized. So you know where I'm coming, Mr. Manik. 5 years, great. In fact, a lot of people have paid with their lives, unfortunately, RTI activists. 2G scam happened because of RTI. Other scam is exposed. Incidentally, by the way, 2G scam, we say, it happened only 2000, 2007, 8. In 2 years, it's national headlines. So let's not be too despondent about the vigilance of the citizens of this country. Now, the point about RTI Act is that, question, how many cases disposed, how many RTI queries, and how many people were penalized? Unfortunately, answer is hardly, I think something like a couple of thousand, and total money collected is also a few lakh rupees in 5 years. That means there is some weakness in the regulation. It requires to be, the people have to be penalized. Penalty is being very lax. So this is just to make the larger point that our system is somewhat getting in place, getting perfected, fine-tuned, tweaked, but we need people to constantly question the implementation. Last comment, sorry, I have taken too long. What reform do you need in stock market? I think it is high time that stock exchanges be made subject to the RTI, because they have got exemptions so far. So I think that's the problem. It has been stayed. They got a stay order from Delhi, but I think it's their public institution. They should be. So that will be a great reform.
Just one more quick question for you, Dr. Ranade. I think one important issue he has raised is P-notes, and that is, I think, caused a lot of question mark on the integrity of the markets. You ban them, then again a new chairman.
Thanks for raising it. I'm very happy to be associated with the book, because on the same page that the connection with Professor Vaidyanathan and so on, he has, thankfully, for me at least, said good things about the Tarapur committee, of which I was privileged to be a member. And one of the clear recommendations of our committee was to ban P-notes. But I must say, I must clarify what P-notes are. P-notes are, like you said, we have capital controls. Our country is capital closed. I'll need to take 2-3 minutes on this, because there's a nice history to it. That December 1996, the IMF met in Hong Kong. They were almost on the verge of strengthening their articles of association to make it compulsory. If you are a member of IMF, you have to open your capital account. Thankfully, in June 1997, the East Asian crisis happened. Thankfully for us, that is, because the first Tarapur committee had submitted its report. Thanks to that, all that enthusiasm about capital market opening up waned, and even today, after 14 years, it has not come back. So, capital account opening is a double-edged sword, and because our capital account is closed, one of the consequences is that a foreigner, Mr. John Smith or Mrs. John Smith, cannot directly participate in the stock market. If you want to come and participate in our stock market, you have to come as Mr. John Smith Inc. You can only be an incorporated entity. That entity has to go and register itself with SEBI. That registration process is to take, I believe, a couple of years. I mean, maybe it's much better now.
21 days.
Now much, I'm sorry.
It's just 21 days. It's all on the website.
So it's an elaborate process. You got to register. So Mr. John Smith or Mrs. John Smith individually, even if they are excited and greatly impressed with the India growth story, cannot participate in this wonderful market. They have to come as an incorporated entity. That position still remains. So the P-notes is like a shortcut, because Mr. John Smith says, I want to invest in India stock market. In fact, Mr. Raju, not Raju, but Mr. Nilesh can invest in New York Stock Exchange as an individual now. Why can't Mr. John Smith do that? Why is it not reciprocal? That's a different question, but they can't. So the only way they can participate in India stock market is if they come through a mutual fund, but very, very few mutual funds in the US directly invest in India stock, unless they're a dedicated fund. Yeah. So, well, the only way left is this thing called P-notes. We don't need to go into description of it. So, but unfortunately, it's not Mr. John Smith or genuine Mrs. John Smith. It is sometimes Mr. XYZ, who is perhaps a member of parliament here and has some, spare money. The round tripping happens. So, we said this should be banned, but we have to recognize the larger principle that basically this has arisen. The whole phenomenon of P-notes became a monster because we have a closed capital account. So I think we need to recognize that this is something we need to deal with. On one hand, if others want to participate in our stock market growth, we need to find out how. Should we make it very elaborate and very, even if it's 21 days, they still need to be incorporated. It has to be an FII. So one via medium, now I'm not speaking as a member of that committee, but that report is already 4 years old. I think again, the principle is transparency and disclosure. Why can't we have a system? Why can't we allow the following situation? Think about it. This is just an idea. Mr. John Smith, you want to invest in India stock market, right? Well, first open an account in Bank of Baroda. Open a rupee account. Bank of Baroda has a KYC procedure like every bank in India. We will allow you to open so bring your dollars into rupees. Yeah. So you take the currency risk. You open a rupee account here, and then we will allow you to invest from that Bank of Baroda account into our stock market in rupees. So you will take the currency risk, plus you will have complied with the KYC norms, etc. And this is just a wild idea. It could happen, so P-notes is bad, but the principle behind P-notes is that there are individuals, in the world who want to participate here. We need to find a way to do it in a transparent way.
I will. I'm coming to both of them. Nilesh, I think coming to you, the role of the media itself. I mean, you're on the TV channel, you also recommend stocks. A lot of fund managers and stockbrokers do recommend stocks. I think, in fairness, all the stock market channels do carry a lot of disclaimers and so on and so forth. But there is a tendency for the investor who's watching the millions of viewers during the daytime to go by that impulse. Should people who give advice be more balanced? You think so? There is a lot more onerous responsibility on them? Or do you think the media...
Do you smoke?
Pardon?
Do you smoke?
No, I don't.
Why? ITC में
High governance.
Nilesh, by coming to the role of the media itself, I mean, do you think...
I mean, see, this is the problem with us. No one wants to take responsibility for its own action. The country is in pits because everyone else has made a mistake. I have not made a mistake. If I was SEBI chairman, I'll clean off the regular capital markets like this. We don't want to thank the person who has done the work. We don't know what constraint he is operating in. You can't have everything perfect at one go. So please take responsibility of yourself and then evaluate other persons. In media, there is something which is white, there is something which is black, there is something which is grey. But you as an investor, if you are not following the ITC's advertisement for smoking or XYZ's advertisement for drinking, then why are you following CNBC or Bloomberg UTV or NDTV's advice for trading?
No, one quick point. The ITC advertisement for smoking clearly exhibit a lung and two bones. That's very important. No, and similarly the drinking advertisement everywhere, even in the smallest drinking shop, it clearly says drinking is injurious to health. Don't drink. I hope, you don't. So they also can start telling,
We always say that mutual funds past performance is no guarantee for future. But the point is that
it is told in such a speed, I am not even able to get what it is. And all the funds, I don't know, I had the same advertising fellow to tell it like that.
Now, whatever they say should be intelligible. That's all been done.
No, it's okay. It's a light answer, right? I hope you.
What is more important is, that's very important is, all these advertisements for mutual and all that clearly say investments are subject to market risk. Very clearly said. And exchanges very often come out with do's and don'ts for investors. If you don't follow, you have to be blamed. Who else will be blamed?
And sir, my one point is that when we are buying gold,
I am with you on that.
How many times 18 karat gold is sold at 24 karat gold?
A lot of mis-selling happens everywhere.
Now, is there any complaint for that? The amount of losses which people have suffered in plantation company is much more than the amount of losses which they have suffered in aquaculture company, granite company, organic chemical company, all those companies which disappeared over the last 20 years. Even today in Bombay, if you read newspaper, you always hear one or two stories about best employees getting duped by person who is doubling his money every 3 months or 6 months or 9 months. And this is happening in Mumbai. I don't know what will be happening in other parts of the country. If we see the banks, again, if RBI is not supporting those banks, so many of banks will collapse. The amount of losses which some of the Chennai headquartered banks have made or Bombay headquartered banks have made, it could have caused immense damage to the system. So there is no perfect investment.
Mr. Anantharaman, last few words. 30 seconds.
I only like to emphasize that I already told nothing is perfect as far as human things are concerned. The stock market also reflects that. Doesn't mean it is not this thing. Ultimately, the investors have to be aware. If KV tempter applies to every field of consumerism, it should apply to stock market. Why put the blame on stock market? Because it is being highlighted, blown out of proportion. Maybe because stock market gets so much of publicity due to media, press and other things. That is the reason why I feel it gets magnified. But I think we have to be on our guard rather than blaming any outside agents.
Yeah, I think I'll end this discussion on thank you everyone, Nilesh Bhai, Mr. Anantharaman, Dr. Ranade and Professor Vaidyanathan. Thanks so much for being here. Seema.
So if you don't mind, can we take quick questions? 4 questions.
I have a question for Nilesh Bhai. See, we are all intermediaries encouraging people to park their savings in meaningful instruments for the long term. However, what we notice is, as individuals, our voice is not very strong when we have to query companies on their accounting or disclosures. My query is, why are institutional investors in India not taking the lead in shareholder activism for better transparency and disclosures? And we also have a phenomenon now, people are coming out with non-voting shares, which clearly indicates that there is a difference.
Your point is very valid. As institutional investors, we have not become as active as one should have. But please remember that Satyam scam came out because we, on that particular evening, went against the resolution. If it was not me, Madhu Kela and couple of other fund managers, Satyam scam would not have ever come out. Now, this is something which is never appreciated. Second, there are certain regulations which are needed for giving teeth to the institutional activism. I will recommend you to read today's Times of India article which says why corruption in India can never be removed. Because we have created rules and regulations in such a manner that corrupt can never be punished. Similarly, today, when I am voting, we have a scenario where the registered office will be in some distant part of the country. If I give proxy, will that proxy be utilized? I don't know. There are certain practical limitations which come into play. So your point is very valid, and there is no defense at institutional levels that we have not played our role well. However, there are many things which are done, behind the curtain. And I'll give you an example where we have done it. Myco is a very, 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 very respected company. They were publishing balance sheets which were on the other side of Satyam. So they were kind of inflating expenses and showing the profit at a lower level, and then they were constantly buying back the shares. We worked with Robert Bosch in Germany to push Myco in India to deliver better corporate governance standards, better communication, and at least have one investor meet and so on and so forth. The result is that Myco stock today is trading at where it is trading at. So this was done behind the curtain. We didn't come on CNBC or NDTV to show that this is what we are doing. There was another company which was also going to do similar to Satyam by merging its real estate arm into listed company. We worked with media to put on newspaper that if this happens, the market cap will be destroyed. Then we used that media article which was kind of seeded by us to go to the management and say that why do you want to destroy market cap? Finally, management could understand. Now this is all happening behind the curtains. But at the same time, are we as active where we can throw out a management from a company because it's not doing well? No, we haven't reached that level. What we need to probably do is to introduce proxy voting service standards like US, where if I'm voting in favor of a resolution, why am I voting? And if I'm not voting, why am I not voting? It should be recorded. That responsibility, whenever it comes, I think will make institutional investor a bit more active. But we haven't done our role better. I mean, we have a lot of room to improve there.
As you've already seen, when stock markets are compared to casinos and that too rigged, it definitely brings out various opinions. We at the National Economic Debate have a burning desire to discuss issues of national interest, and I hope that this panel discussion has given you new perspectives and widened your thinking horizons. I request Mr. Venkatesh to come on stage and thank Arun for moderating this session.
Thank you, Arun. You are brilliant, and thank you very much for introducing me on the book. Very much. I have no words to express.
May I request Mr. Anurag Gupta, the brainchild behind the National Economic Debate, to please come on stage and felicitate the speakers. We thank Shri G. Anantharaman, Dr. Ajit Ranade, Mr. Nilesh Shah, our lighthouse, Dr. R. Vaidyanathan, and last but not the least, a close friend of the NED team, Mr. M.R. Venkatesh.
I will not bore you with names that you don't know by thanking them all individually, but I would just like to thank one person, and that is you, because when you come here, I get encouragement to do this again and again and again and again. So only you. And I would just like to call all the NED team over here. Everybody please come in. Everybody, please. And I would like to request all the speakers, all the dais, please stand up, sir, for 1 minute. We want to end with a very big, important, burning message. And I would like to just tell that 50,000 cows are slaughtered every day in India. And we would like to end with this message. Please, AV please, and the lights off. There is a Goraksha box kept when you go out of the auditorium. All of those who want to help themselves can put money in that box, because the cow doesn't need us, we need the cow. Please. Thank you for coming.